Oh, so welcome to today's webinar. Today we're looking at the good old question, which structure to use your business to set your business up as, sole trader or limited company. So just a little brief introduction to myself. My name's Cheryl. I am the CEO and founder of Pink Pig Financials. I'm a wife, mum, dog mum, horse mum, domestic abuse survivor and advocate, speaker, business mentor, and a chartered accountant. I empower women to achieve financial independence, whether that's survivors rebuilding their lives, business owners seeking financial independence and confidence, or employers creating safer, more supportive workplaces. And the reason I do this is because I never want anyone to feel trapped like I was. So I set up Pink Pig Financials in 2014 for some financial freedom and flexibility to work around my two boys that were very young at the time. Fast forward 11 and a half years, which still seems madness. We're now a team of 7. We all work remotely across the country, although I do have a couple of ladies at the moment traveling across the world, which is very annoying when they come on and it's nice and sunny and hot where they are and it's raining in England. But yeah, we all work flexibly around children and other commitments, and as you can probably tell, we're not your typical accountants. We are very pink, an all-female team, and we are an award-winning digital accountancy practice. We focus on our clients, our business owners, more around what they want out of their lives, and then we offer them advice and support and accounting services to help them to get to where they want to be, rather than just focusing on keeping the tax man happy. So let's move on. So I said today we're going to look at sole trader versus limited company, and it could be a case of why does it matter? But as we'll go on to see, each individual circumstances, there may be different reasons of why it matters for your business. And why your business is set up can mean different things for different situations, different tax rates and all things like that. So I don't want to go into too much now, so I'm going to go through it all in the over the course of the session. But we'll be thinking about a manner of things from the industry you work in, the perception for your clients, your future goals, which are probably one of the most important bits, your family setup, and of course we will talk about taxes as well. But the key point is it does matter. And the reason it matters is because your business may not be the same as anybody else's business. Even though you could be doing exactly the same things and you feel you're exactly the same, there'd be different circumstances there. So what we do is we really encourage everybody not to make decisions based on what their friends in business are doing, or what so-and-so's down the road, or friends, cousins, uncle in the pub, whichever they say. It might seem easier for them, or they might be doing it one way, but it may not be the best way for you. So today I'm going to take you through all of the considerations so that you can feel confident about the choice that you're making. And it's really important as well that you continue to make sure that that is the right structure for you as you go throughout your business journey, because what's right for you right now might not be the right choice in, say, 6 months, a year, 5 years down the line. So yeah, quite simply, it matters because your business needs need to work for you to help you achieve what you want to achieve, not work against you. So as I said, I'm going to take you through the main differences today between sole trader and limited company, but I just wanted to point out that these are the two main structures that we see. There are a couple of other structures. You've got partnerships and limited liability partnerships. But I didn't want to make it too complicated, so I thought I'd focus today on the main two ones that we work with most of our clients. And before we do get going, I do have to say that, and it's a bit of a boring disclaimer, but what I'm sharing here today is just general information. So it's not to be taken as specific advice, because obviously I don't know your situations. So take what I've given you today, or I will give you today, as a general information for you to consider. But if you want specific advice relating to you and your business, then please do speak to an accountant and there is an opportunity to book a call, a free call with me at the end if you'd like to. So first off, we've got your legal status. As a sole trader, you are your business. There's no distinction. It's just you. When you're a limited company, you and your business are two separate legal entities. So your business is completely separate to you. It's an entity in its own right. Although you're two linked, it is a completely separate business. So there's a really important legal distinction there to make at the beginning. And that will feed into a lot of the other differences as we go through today. We've then got tax, which is quite a big one and what most people will focus on. As a sole trader, you are taxed on all of your profits. But as a limited company, the company pays tax on its profits, and what you take out personally, you will be taxed on personally as well. So if, for example, you was making really healthy profits, but you didn't need to take all of that money out for you personally, you wanted to leave some in the business to save and everything like that, potentially a limited company will allow you to do that. So with a limited company, yes, you'll pay tax on all of your profits at a lower rate, but you can leave money in your business and you won't be taxed to take it out personally. But as sole trader, you're taxed on all your profits, whether you actually need to take it out of your business or not. Losses can be carried forward or offset against employment income when you're a sole trader, which is quite handy. So if you're employed and have a business, so like a side hustle or you're starting up gradually and you're expecting losses in your business, you can offset that against your tax paid in your employed role and get a tax refund. As a limited company, you can only use the losses on company profits. You can take them back a year and you can take them forward, but you can't do anything else with them. And with a sole trader, there's less expenses available to claim, which means there's less things you can put through as tax deductible, which means your profits will be higher. But in a limited company, there's more expenses you can claim and more tax planning opportunities. So as a limited company, you will have a salary, and that salary is a tax deductible expense. So already your profit will be reduced by £12,500 or just under £12,500. There's also things like pensions. As a sole trader, you can't use that as a tax deductible expense, but as a limited company, you can. And there's a few other bits and pieces as well, and they can quite rack up. What you can also do with a limited company is if your partner or children or a friend, if you wanted to, doesn't have a salary or any income themselves, they could be part of your business. Or if they're lower paid salaries, then they could be part of your business, and that means you can then give them a salary and use some of their tax brackets. But one thing I do just need to point out and caveat is that sometimes paying the least amount of tax isn't always the smartest move, because, for example, if you want to buy a house, you need to show enough profits to be able to get the mortgage you want. So if you're trying to reduce your profits as much as possible, when you go to get that mortgage, you won't be earning enough to get your mortgage. So it's another reason why we look at the individual, what they're trying to achieve, what their goals are, before we can give any advice on tax for that. So yeah, as I said, all planning will take into your personal goals professionally and personally, so we make sure we offer the right advice for you and what you're trying to achieve. You've then got risk and privacy. So I'll go into risk first. So as a sole trader, as I mentioned at the beginning, you are your business. Therefore, all of the debts of the business are your debts. Your home, therefore, could be at risk. And the business will also use your personal credit rating for any borrowing that you may want to do. So if you wanted to get like a loan to make an investment in some equipment, for example, that would be in your name personally, not the business's name. However, as a limited company, the debts of the company will belong to the company. There's no risk therefore involved unless you have or you sign any personal guarantees. So sometimes loans will ask you to sign a personal guarantee, at what point then yes, there will be some risk. You wouldn't be protected personally, but unless you sign one of those, you will be risk-free. And the business itself will build its own credit rating, which means it'll be able to borrow in the future as well. So one thing to think of is with your business is if you're going to be borrowing money or buying on credit, like accounts and things, it may be worth you considering a limited company because you will be more protected. And if you are a risky business profession, there could be an opportunity there to give yourself more protection as well. So yes, you can have insurance, and every business would have insurance. I'd recommend every business have insurance, but of course that has limits and it may not fully cover you. Also, if you're looking to bring on board investors, quite often they would want you to be a limited company so that they can be part of that risk and protection. The other thing is your privacy. So when you're a sole trader, your business is private. So no details are shared anywhere unless you share them yourself. But as a limited company, your business is registered with Companies House and is therefore in public domain. So anybody can look up your business on Companies House and see any details that you've put on there, mainly your address and your accounts. You can use a registered address though, that is a virtual registered address, which will therefore protect your privacy and means your home address won't be on public record. So there are ways and means around about it, but it does mean that people can view your accounts. Again, we are able for small businesses to file a simplified set of accounts, so it's not the full details are on there, but it's just something to bear in mind that comes with a limited company. We then move on to paperwork. So as a sole trader, typically there's been less paperwork. It's been a lot easier and therefore a lot cheaper in accounts fees wise, and a lot less for you to do yourself. Now there is Making Tax Digital coming in, which I'm going to talk more about in tomorrow's session. But with Making Tax Digital, it will mean as a sole trader, you'll need to do 4 quarterly returns a year through software, plus a final declaration, which is basically the same as your current tax return, but just done in a slightly different way. So it's going from 1 tax return a year to 5 filings. So just something to bear in mind if you're newly setting up. It does still, however, generally mean lower accounting fees because it is still less paperwork than a limited company. Bank account wise, I always say it's always best to use a separate bank account. Technically, you've not had to under a sole trader before. You can just use your personal account. However, we've always said it makes it life a lot easier if you have a separate account. It doesn't have to be a business account, although the banks, if they cotton on that you're using a personal account for business, they probably will ask you to set up a business account. But 100% recommend that you have a separate business account, especially with MTD coming in, because it means it's just going to make everything a lot easier for you. With a limited account, with a limited company, as I mentioned at the beginning, because it is a separate legal entity, it must have a separate bank account. That doesn't mean you can't pay for things personally, because we've all been there and done that, use the business card, personal and business expenses on your personal card. So you can do it now and again, but that can't be the norm. The norm must be a separate bank account. And with a limited company, you will file a set of year-end accounts and a corporation tax return, as well as a personal tax return for any money you take out of the business. You've also got an annual confirmation statement to be filed, which is confirming all the details that Companies House have on record for you is correct and up to date. So there is a bit more paperwork there. And because it's a lot more formal, the paperwork, generally there are higher accounting fees involved as well. However, it does mean that with all of this extra paperwork and more complex accounting, that it is easier to package up the business and sell it if that is one of your end goals, one of your exit strategies. So yeah, a lot of people that are looking to buy a business would be more likely to buy a limited company because you're buying the shares and the assets and the goodwill of the company, rather than a sole trader where, again, there's no legal distinction. So what is it you're actually selling? We then move over to perception, and I'm not a fan of this one, but it's true that there are perceptions of businesses, so it's something that needs to be considered as well. So a sole trader, it always feels a little bit unfair because neither of them are worse or better than the other. But obviously with the stereotypes, you do have to consider it for you and your business, especially depending on what kind of business you are running, what kind of clients and customers you'll be having. So generally a sole trader is seen more as a one-man band and a little bit less credible, whereas a limited company will seem that it has more credibility and it's a more professional business. But I always go back to looking at A, your goals, but B, your customers, your ideal customers. What do they expect or need from you? Do they expect you to have the limited at the end of your company name? Do they expect you to have that protection of a limited company? For example, if your customers are likely to be big corporations, the majority of those big corporations will want you to be limited as a little bit of protection for them. But if your customers are going to be businesses similar to yours or general public, they may not know or understand the difference themselves. They may not care. So it really does depend on your customers and how you feel as well. But yeah, I hate that one because it always feels really mean, but it's something you have to think about. So I've gone through the main differences. So now I just wanted to go through a little bit of myth debunking because I hear so many things around limited companies, especially, that I thought I'd go through the things that I hear and tell you what is and isn't true. Because even my husband said one to me the other day, and I was just like, "Oh, okay, didn't know you thought that." And he's self-employed as well, so it's really interesting to hear. So first of all, one of the myths is that you've got to be earning a certain amount to have a limited company, and the answer to that is no, you don't. You can have a limited company at any sales level, any earnings level whatsoever. Even if you're making a loss, you can have a limited company. And the same for a sole trader. There's no limit you can be a sole trader for before you have to move to a limited company. So both of them you can do however you want, with whatever money coming in and out. That's totally fine. Also, a lot of people believe that if you are a limited company, you have to be registered for VAT. But again, that's another myth. Both sole traders and limited companies, as soon as you hit that £90,000 turnover threshold in a rolling 12 months, that's when you need to register. Doesn't matter what your business type is. It's that turnover threshold that counts. And you can register voluntarily either as a sole trader or as a limited company. You do not need to be a limited company to run payroll, so you can have employees all CIS subcontractors as a sole trader or a limited company. But just to bear in mind that as a sole trader, you will not be an employee of your business. Whereas as a limited company, you will be an employee of your business. So that's the only difference there. But other than that, you can have employees or CIS subcontractors in either structure. Another one that we hear is that you need to be more than one person in a limited company, which again is not correct. You can be just you, yourself, me, myself, and I in a limited company. You can have more people in a limited company, but yeah, you don't have to have more than one person. Generally, if you're two or more of you, we would either look at a partnership on a self-employed basis or a limited company or a limited liability partnership. But generally, for the majority of people, just a standard limited company is the best if there are two or more of you. Another one is that you are completely secure from debt liability. And as I mentioned earlier, you mostly are secure from any debt, which is one of the reasons it's limited liability. However, if there are any personal guarantees, again, that's where you wouldn't be covered. So it is a big thing to think about. And if you are taking on any debt or any credit accounts or anything, always check the fine print just to make sure that you are covered. You've not signing any personal liabilities or personal guarantees or anything in there. The other one that we hear a lot about is that you don't need an accountant as a sole trader, but you do as a limited company, which again is not correct. So you can prepare and file accounts and tax returns for either business if you want to. The reason that the majority of limited companies do work with an accountant because it is a little bit more complex, and it's just that peace of mind knowing that somebody has dealt with it, an expert who knows what they're doing. And yeah, it just gives you that peace of mind and the hassle and stress away from you. Technically, a tax return as a sole trader is easier. However, we still see a lot of clients, sole trader clients, that aren't aware of all of the things that they can do and still make mistakes in the tax return and end up costing them money. So again, it all depends on how confident you feel doing it, whether or not you want an accountant. But yeah, that was it. That was all the myths. The other thing that I just wanted to point out as well is quite often we have clients that can change. So you can change your structure of your business. And we have had clients who have done this. So we've had one client, especially that we're working with at the moment, who originally was a sole trader. And they was getting quite big, taking on a lot more liabilities and everything. So we changed them over to a limited company. I think he'd been in business for about 5-6 years before we took him on, and we set him up as a limited company, and that was running for a good 5 or 6 years again. And then his circumstances changed again, and he started to make the business smaller because it was becoming more of a second thing rather than his main business. So what we did is we looked at it, and because of his circumstances, it wasn't right him staying in a limited company. We moved him back to sole trader. So he's now in year 3 of trading as a sole trader again. So it is okay to change your structure as you go along, as your goals change, as your circumstances change and everything. I'm not saying to keep switching and changing like every year, every 2 years and things like that. But just wanted to point out, just because you do set up as one way to start with, it doesn't mean you can't change it down the line. As your business circumstances, your personal circumstances and your goals change, you can adjust your business accordingly. Personally, I set up as a sole trader when I first started, because to me, it felt simpler. Even being as an accountant, it still felt simpler to me at the time. And I was running at a loss. And it was just an awful lot easier admin wise, as well as doing everybody else's accounts. However, as my business grew, I then changed to limited company. I then had some bigger goals. So I set up a holding company with other companies underneath it. And I've recently just gone back to standard limited company because, again, my circumstances and my goals have changed. And I've now just got 2 separate companies, completely separate from each other. And that is working well for me and my goals. But yeah, we've helped quite a few clients through this for various different reasons. What we find the majority of people are doing is, as it grows, they become more of a limited, and also where some have made their businesses smaller, potentially gone back to employment because they've been offered these great opportunities, that's when they've changed back to sole trader. So yeah, what I would say is it's possible, but always speak to an accountant first to get the advice and manage the process as well, because there are some nuances in there that need to be dealt with. But it is possible. I just wanted to say that. So let's get into some of the how. With sole trader, it's quite simple to get set up and going. You just need to register with HMRC for self-assessment. You can just do a Google search, register as a sole trader, and it will take you through the whole process. With a limited company, you need to incorporate with Companies House, register for corporation tax, and also register personally for self-assessment. Now, I've put all 3 of these on here because those are the 3 main steps. But again, it all depends on your circumstances, whether or not you need to register personally for self-assessment as well. But those are the 3 main things that you need to do. And again, you can do all of that just for a Google search, register my business with Companies House, and it'll take you to the government page where you can work through all the steps. And it's really simple and easy to do yourself. The one thing I would say with a limited company is understanding the share structure is quite important, because it's really hard to change it down the line. So if you have, for example, you think down the line you may want to sell your business, or you may want to bring somebody else on, don't just set up with 1 share, pretty please, because it's really hard to change that down the line. So yeah, it may be worth speaking to an accountant before doing it yourself. And there are a few other bits in there where we've had to come in and sort out some issues afterwards. So always speak to an accountant. Even if you think it's a really straightforward setup, speak to an accountant before you do it yourself, just to be on the safe side. Then once your businesses are set up, you can open your bank accounts. You can't open a limited company bank account until you've got your incorporation certificate. That's one of the things I want to see. You then need to get your software set up for your record keeping. I'm a huge advocate for software, whether you need it or not, because I think it makes everybody's life so much easier. And there are some really cost-effective options out there these days. Insurances, and then you can start trading. There's loads of other bits as well to get set up and going, like the fun stuff, websites, email addresses, and things like that. But yeah, to actually start trading, all you need to do is register, get your bank account set up, insurances, and I'd say software as well, because it's just going to make your life a lot easier in the future. And then you can get going. Just a couple of other bits to note though. So if you're already trading, you can't backdate a limited company. So if you're already trading, but actually you think limited company is the best option for you, then you would register from, say, for example, today, and start trading under that limited company going forward. And the bit that you've already traded will be done as a sole trader and will need to go on a tax return regardless. However, if you are already trading and you want to stay as a sole trader, then you just need to tell HMRC when you started trading from, and you'll just need to do tax returns in line with that. So it's a lot simpler to do. And if you are looking to set up as a limited company, your name needs to be a unique name. It cannot have any royal or political words in the title. And it needs to be completely unique. So you can go onto Companies House and you can look at what's already there. So you can go in and put your ideas in and just make sure nobody else has already taken that name, which can be really frustrating, because when I was trying to name my second business, every name that I wanted was already taken. And even when I went on to Greek versions, some of that was already taken as well, but I got there in the end, so I'm really happy. But it is just something to note that you need to do that. What you can do is, if your name is already taken, you can set up a legal name and have a trading name. The only problem with that is potentially trademark issues. So you just need to make sure that the name that somebody else has already taken isn't trademarked. And it could cause a bit of confusion if you're going after similar customers, because they may not know which business is which. So again, if somebody's already taken your name, and they're in the same industry as you, I'd try to stay away from something too similar from it. Just works better for you, especially if they've got a bad reputation. You don't want you getting caught up in that. Oh, and then I'm just going to finish off with a little bit about how each structure works. So for both of them, you need to keep records of all your money in and out. But for a sole trader, your tax year will run from the 6th of April to the 5th of April the next year. You'll do 4 quarterly returns a year under Making Tax Digital, and with that final declaration, which replaces the standard tax return, and the tax payment will be due by the 31st of January as is now. You will pay income tax and national insurance on all of your profits. As a limited company, it will be a separate financial year, so it usually be the 12 months from when you start trading. However, you can choose to change that year. So a lot of people like to use the tax year because it lines up nicely. A lot of people like to use a calendar year. My businesses are both the calendar year because for me that works. But a lot of businesses also will be just 12 months from whenever they set up. It's entirely up to you. Again, you can play around with the dates of a limited company so that you are planning your tax payments and your when you're going to be taxed on certain things, which can be quite helpful as well for a cash flow point of view. So again, it's always worth chatting to an accountant just to run through that if you'd like to. Then you've got your annual accounts and corporation tax return and payment. So the annual accounts need to be filed a year after, 9 months after your year end. The corporation tax payment is 9 months and 1 day. And weirdly enough, and I've still never understood the reason for this, but the actual corporation tax return is not due for 12 months after your financial year, which means you've actually got to pay the money before you do the tax return, which just sounds completely bonkers because you need to do the tax return to find out how much you need to pay. So with all of our clients, we just all work to the one date of 9 months after year end because it just makes everybody's life a lot easier, and it just means that everything's done in plenty of time. And then salaries and dividends will run monthly, and your salary will be in line with the normal tax year as well. So your personal tax return will be in line with standard tax year. Anything that you've taken out of the business within that tax year will be included on your personal tax return, which again is the 31st of January deadline for filing and paying. So as a limited company, you would generally, again, depending on your circumstances, but for the majority of people, you'd be an employee of your limited company and take a salary of 12,500. So you'll get the tick for national insurance, but you don't need to pay it because it's set at a certain level. I think I've said Okay, yeah, on your tax return, if you've got any other income, so the final declaration for sole trader, or your tax return for limited company, if you've got any other income, then that will be included on your annual tax return as well, or the final declaration. But then other than that, day to day, it is the same how it works. Keeping records, if you've got payroll, running payroll, if you're VAT registered, running VAT returns, serving your customers basically. I do recommend, as I've said a few times before, going onto software for your records, because it just makes your life so much easier, and it means you can automate so many things and you can get paid quicker and loads of other reasons. I'm not going to go into that because that's not what we're here for today. But if you did want to have a chat about software, then I'm very open to that as well. So tried to give an overview today rather than go into too much specific. But we have got a lot more information, and it does give you examples and a few other bits and pieces. So when I send out the recording of the session today, I will also include a copy of our guide, which goes into more detail, and it's got some specific examples on how things work and everything. We've also got loads of other resources for setting up a business, running a business on our website, which a lot of them are free. So feel free to go and have a look on there. It's just pinkpigfinancial.co.uk/resources. So it's nice and easy to see. So I'm hoping today's answered some questions and that you're ready to get going and get registering your business, starting what you want to do and take it out into the world and everything. So the next step would be to get your business set up and registered. If you do want some support though, we are here. So please feel free to get in touch, book a free call with us, have a look on our website at what we can offer and everything else. We are here to help. Are there any questions just to finish up today?
I haven't got any, no.
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 No, it's fine. Well, if there are any questions off the back of this for the anyone watching the recording, or if anything crops up as you go forward and go through what we've gone through today, then feel free to get in touch, and I'm happy to answer any questions at all, or talk through your own specific circumstances as well. So yeah, you can just book a call by scanning that, or it'll be in the email that I'll send out with the recording as well. So yeah, that just leaves me to say thank you for joining me today. I hope this has been helpful and it's answered some questions and got you going on your journey.
Great. Thank you very much.
No, thank you. And yeah, as I said, if we can help any other way, then please do just shout. That's what we're here for.
Okay. Thank you. Thanks. Bye-bye. Bye.